All right, welcome to The Explainer. Today, we're jumping into a topic that's super important for your financial health, but let's be honest, can feel kind of complicated. Life insurance. Our whole goal here is to just break it all down and show you how it can be a really powerful tool for you and your family. So, let's just start with a big question. What is your financial shield? I mean, in a world that's, well, pretty unpredictable, how do you actually protect yourself and the people you care about from a sudden financial hit? I know, it's a heavy one, but it really gets to the very heart of what we're talking about today. You know, the source material we're looking at today has this really great way of putting it. It calls insurance a security shield. And that's the perfect image, isn't it? It's not just some policy document. It's the shield that stands between your family and a tough time when life, throws one of its curveballs. Okay, so let's dive into our first section here. At its very core, what is insurance? Well, it's all about creating a financial safety net. It's you taking a step today to make sure things are stable no matter what happens tomorrow. So why is this safety net such a big deal? I mean, besides the fact that you need it for things like driving your car, the real power here comes down to two big things. First, it gives you this incredible peace of mind, right? It's a buffer against the shock of a sudden accident or illness. But even more importantly, it's a promise. It's how you make sure your family is financially secure, even if you're not around to take care of them. So let's get into the nitty-gritty. We're going to use the Life Insurance Corporation of India, or LIC, as our main example here to really explore the tangible benefits you get. Because it's so much more than just a single check. See, a policy isn't just one thing. It's this incredibly versatile tool. Now, the main event is, of course, the death benefit for your family. But it's not just about that. You can also get tax benefits every year, a potential return on your investment, and even access to a loan facility if you need it. And hey, if you outlive the whole thing, there's a maturity benefit waiting for you. It's built to give you value your whole life, not just at the end. I really want to pause on this term, rider benefit, because it's so important. Think of it like this. When you buy a car, right, you get the standard model, but then you can add on all these extras, leather seats, a sunroof. Riders are just like that for your insurance. For a small extra premium, you can bolt on specific protections, like extra cover for an accident or a critical illness. It just makes your financial shield that much stronger and more personal. Okay, so let's talk about the actual types of policies out there. And look, I get it. You hear all of these names, Jeevan Labh, Index Plus, Jeevan Umang, and your head starts spinning. But don't worry. We can basically sort them into three simple categories, and it all starts to make sense. First up, the first big category. We can call them savings and growth plans. These are really for anyone who wants to pair their life insurance with a good, disciplined savings habit. It's about building your wealth over time in a pretty stable and predictable way. So what does that look like? Well, these are your classic endowment plans. The key thing here is they're non-linked, meaning they aren't directly tied to the ups and downs of the stock market, which gives you more predictable growth. A plan like Jeevan Labh, for example, is built for that steady saving, while something like Jeevan Laksha is specifically set up to create a fund for a big life goal, like sending your kid to college. All right, category 2. Now, what if you're someone who's a little more comfortable with risk? Maybe you want the chance for higher returns. Well, that's where market-linked plans come in. You'll hear them called ULIPs, and they connect your investment directly to how the stock market is doing. So what in the world is a unit-linked insurance plan, a ULIP? It's basically a hybrid. Let me break that down. A chunk of your premium, that pays for your actual life insurance cover. The rest of it, it gets invested in funds that are tied to the stock market, kind of like a mutual fund. And that means the value of your policy can go up and down with the market. A plan like Index Plus is the perfect example here. Its value is tied directly to how stock market indexes are performing. Now that brings the chance for much higher returns than a traditional plan. But, and this is a big but, it also comes with higher risk. It's that classic high-risk, high-reward trade-off, and you have to be comfortable with it. Okay, let's look at our third and final category. This one is all about playing the long game. It's for folks who are thinking about long-term, maybe even lifelong coverage, and who want to create a steady stream of income for themselves down the road. You can almost think of it like creating your own pension, and we've got two great examples to show how this works. First, Jeevan Umang. Think of this as coverage for your whole life, like up to age 100. And once you're done paying premiums, it starts paying you an annual income for the rest of your life. Then you have something like the new money back plan. This one's a bit different. Instead of waiting until the end, it actually gives you money back in chunks during the policy, giving you cash at important moments. All right, we've talked about what it is, why it matters, and the different types. So now the big question: how do you actually do it? This next part is all about putting a plan into action, from picking the right one to taking care of it over the years. And it really boils down to 3 simple, common sense steps. First, and this is so important, you've got to assess your own situation, your age, your income, your family, your goals. What do you actually need? Step 2, start comparing. Look at different plans, see what the premiums are, what the coverage is. And third, and this is a big one, talk to a qualified advisor. They can give you that personalized advice to make sure you find the perfect fit. And I know what you might be thinking, the paperwork, but honestly, it's usually pretty straightforward. You've got your application form, some standard proofs for your age and where you live, and your KYC documents, like an Aadhaar or PAN card. It's not as scary as it sounds. Now, this next point is absolutely key. Please remember this. An insurance policy is not a set it and forget it kind of thing. It's a living, breathing financial tool that you manage and that can adapt as your life changes. And that's where its flexibility really shines. Let's say life happens and you miss some payments. You can often revive a lapsed policy. Or as your family grows or changes, you can update who your nominee is. And if you're ever in a real financial pinch, you have options, like taking a loan against your policy. It works with you. To kind of wrap this all up, there's this one idea from the source material that just perfectly captures the whole point. What that means is security in life, with life, and also development in life. It's so beautiful, right? It shows that insurance isn't just about protecting against the bad stuff. It's about giving you that secure foundation you need to grow and build a better life. And that brings us full circle, right back to where we started, but hopefully with a whole new way of looking at it. After all of this, from death benefits to ULIPs to managing your policy over time, I have to ask you again, is your financial shield ready? Thanks for joining us on The Explainer.